Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, August 29th. Mike Boutros here with you this morning. Carlos, DJ, Mark, Pete, Thomas, Ziad, great to see you guys all in the room. Aurelian, great to see you as well. So, interesting start to the week. I don't really have that many setups that are in play, but the ones that are certainly coming in some pretty critical levels. So we'll take a look at some of the setups from last night. Gold, Kiwi yen, and euro specifically. I think someone tweeted on to SB Squawk just a moment ago, is euro coming into confluence resistance near term? I do think that's true. On the daily chart, I do have us coming into slope resistance near term. So we will definitely take a look at that. And we'll take a look also at the Aussie dollar and Kiwi dollar. That's what's really all on my list that I'm focused on right now. Obviously, this whole North Korean flyover, the Japanese, or their flyover Japan with that missile is creating a lot of tension and a lot of sort of commentary crossing the wires here. So I think that could be coming a little bit more into market focus. Certainly, if the rhetoric does step up from our end as well, meaning Trump administration, things could get kind of risk averse real quick. So you can see already that markets in the U.S. are pretty well. They're trading off the lows, but they're still trading markedly lower ahead of the open. So just keep that in mind. That event risk there is sort of just looming and could become a lot more of a market focus if things start to heat up more from here. All right, so as I said, feel free to throw out any questions or trade setups you want to review if I haven't noted it yet, but let's jump into yesterday's piece. First piece was on gold. So look, it's a strong uptrend. I just have us coming into a near-term resistance level. So let me bring up the gold weekly chart. Here it is. This is what gold looks like on the weekly front. This was on last night's update. Here's the 618 extension. This is from the advance off the 2015 lows and 2016 lows. 1325. The high so far was exactly 1325.89. So you're coming into this region of which could offer some resistance just a little bit higher. You have that reversal day close off the 2016 highs. That close comes in right around 1337. That's the weekly, reversal close. So just a region of resistance to be mindful of. We've obviously broken above this trend line extending off the 2011 record highs that gold made. We had a slope parallel off last year's high, which held a little bit. This is a clear breakout. Okay, so it looks still constructive. Near term, you just want to use caution about any new fresh long exposure from here. Hey, Pooja says, hey, Mike, some sort of confusion. Daily Effects seems got an email for the weekly scalping webinar. Even managed to log into it, but obviously there's no one there because you're here. That is interesting. I can't tell you why. It's scheduled for Tuesday. That's weird. But in any event, as far as the extension is concerned, that's a big concern for me as far as the immediate long side for gold. Here's what the near-term picture looks like on the daily chart. You can even see that the basic 786 retracement hits on that region as well as basic slopes resistance. Let me just take you back a little bit. Here's the daily chart. Basic slope support, basic slope support. That same slope offered a nice pivot. That same slope off the lows, resistance, support, a little bit of a messy support, but nonetheless support, resistance, and that converges on that same region. So a couple of reasons to be a little bit cautious of favoring long dollar exposure from these levels. Okay, it's still a bullish trade. Like I said, still breakout in my opinion. But if you're not already long, you don't want to get in from here. If you are holding longs, this would be a nice area to take a little bit off the table, bring your stops to break even. As long as we maintain support above the monthly open, I still think you got a lot, or you got more upside to go. 1335, 1366 being the first initial topside targets if we were to breach this region. So, talk about the risk off behavior, and especially if markets sell off harder, or if the Korean tensions start to mount even more, watch out, okay? Because this thing could really just definitely fuel some demand into the gold trade. Pooja, by the way, thanks for bringing that to my attention. I will alert Daily FX. So before we move on to Kiwi yen and euro, I do want to just take a kind of backwards look now and see the implications for the dollar. Obviously, dollar weakness is going to further propagate this trade higher, and the dollar has just been getting slammed. I mean, this thing has not been able to find any type of firm footing ever since Yellen spoke. Moving all my lines around. But look, from these levels, I just want to highlight that I don't really have anything pressing until a soft target at 89.55 on the Dixie, and then a 50% retracement. This is a big retracement that dates all the way back to the lows we made in 2011. So that's going to take you 88.27. But right now, you're checking the basic 38.2 of that advance, okay? Slope, the basic channel that we were in, trendline resistance. We took a channel here, caught support, caught support, caught support. We got the break, saw acceleration. That same slope extending off the high from, October, converges right here on the 38.2. So you can envision a scenario once again where the dollar sees a little bit of a reprieve from some of the pressure it's been under. Gold maybe sees a little bit of a lift, a pullback rather from the recent rally that it made, and then you continue lower. Seasonalities for the dollar heading into next month are not that good. It's still bearish. Seasonalities for the euro after this week turned bullish. So everything sort of mixes well. From here, I would expect some sideways to slightly higher action in the dollar index. If we were to make a close, a concerted close below this region, you're at risk. You're at serious risk here. There's really not much for the dollar as far as support. One thing I did want to take a look at, and I'll do it with you right now, is just this slope. And if we put this slope on, what I wanted to show you is the median line that we broke saw acceleration, and currently that median line converges on this host of near-term resistance. Former channel support, now resistance. You have a longer-term support line here, just higher. You have a 786 retracement of that decline, which we're still in that range. Technically, we're pulling back, but you get the picture. In fact, this is what I would do. Drop that retracement. There's your monthly opening range high, and that brings us basically into 94.20, 94.30. All right, immediate resistance right now, is still going to be somewhere around 92.62. And then, you'd have to clear the monthly open to really signal any type of reversal play on this. From a monthly standpoint, the candle would then be basically a doji if we were to rally back towards the open. But as it stands right now, the momentum signature, if we were to close at these levels, still marking divergence, just use some caution. Hey, Pooja, pound yen? I got it. Let me drop that down. JPY. Any questions here on the Dixie? Again, just a good way to kind of gauge what's been going on in the markets as far as dollar base action. Obviously, the implications of this are more so the euro, which we'll look at in a moment, but that is gold, number 1, and Dixie, number 2. Okay. Back to last night's update. Kiwi yen. Oh, well, let me do this real quick. Here's the near-term picture for the dollar index, guys. Former channel support or former channel resistance also is there as well. 91.92 is the low. So, it's a very tough call for the dollar index at this point. There's really nothing holding this. There's really nothing, if we hold below this level, there's nothing holding this up. It could see some really, real quick losses. Kiwi yen looks like this. So Last night on the update, what we wanted to highlight was basically that Kiwi yen was coming into a longer term support structure. Here's what it looks like on the daily chart. Okay, here's what we looked like last night. This support structure dates all the way back to 2016. You had multiple plays off it last year. Held as pretty decent support, specifically on a closed basis, was very clean back here in April of this year. And that basic trend line converged on slope support right there. 78.13 was the level that we were looking at. It also converges on this high that you made back here in March of 2016. Look for a bounce. Well, we get it. We got it. Now, near-term resistance, or for us to suggest that this bounce has got more legs to it, is 79.36. That's the former swing high from back here in, what was that, May. And it would also suggest you'd break back above this slope. Now, this slope, to be fair, hasn't really given us much, okay? But again, a parallel of that same slope extending off that low literally just caught these lows. So I'm going to work with that for now. Note that momentum has given you some near-term divergence, albeit below 30, a weak signal, but a lower low in price, not reflected in the oscillator. So this thing has sort of rebound written all over it, which is why I was a little bit more comfortable writing about Kiwi yen. Typically, looks like Kiwi yen is not my pair of choice, let's call it. But as far as this is concerned, the technical clarity is pretty well. Big region there, right around 78.20. Divergence, looking for that to gather pace, we'd need to clear through 79.36. Here's what it looks like on the intraday chart, and here's what it looked like last night. Okay, there's a 240-minute. We were just coming. We saw a perfect kiss of that support. We highlighted that 78.13 as our sort of near-term key support, bullish invalidation for the rebound. And here's the pull up. Now checking or trading just below the weekly opening range highs. Here's the 120 looks like. And sometimes, guys, you can tell just from price action. When you look at price and you see a long wick like that and a 2-hour, 4-hour candle closes with a long wick like that right off of key support or a longer term trend line, that's typically a decent tell. Just by looking at price, you don't even need an oscillator or any type of momentum indicator. So that being said, look for near-term resistance right up into this, and then we'll wait for a clear break of the weekly opening range. Keep in mind, guys, if we're, now that I've just mentioned opening range, I just want to note one thing. We're heading into the close of August trade, typically the lowest volume time of the year, especially heading into the close of this weekend. We're going to be going into Labor Day holiday here in the U.S. and it's going to get thin. Market conditions are going to get thin. So not the time to really press brand new trades with excessive leverage. In my humble opinion, I tend to be really shy in these environments, a little bit really light as far as nimble on the leverage size. Because again, those larger swings on thin markets, especially with all this stuff coming in out of headlines right now, can really shake things up. Just a note of caution there. Rushton, I'm so sorry. It's not just you. That's the second person to say that. He says, hello, Mike. Got lost looking for you at Daily FX. How are you? I'm good, Rushton. Yeah, I think there was some sort of mistake there for Daily FX. It's going to be on Daily FX. I'll be there next Tuesday because we're going to take the day off for Labor Day. But no, I'm here, Rushton. Okay. Any questions on Kiwi yen? Okay. Moving right along. Yeah, I'm starting to see tweets about that too. That's so weird. I'm not sure why they had that on there. Okay, so that's Kiwi yen. Look for the rebound. I'm still looking a little bit higher into this region. I probably want to be flat there, to be honest with you. If not, at least bring my break even and take half off the trade or even more. I don't want to get too deep into Kiwi. Interestingly enough, guys, I guess I'll just segue into Kiwi dollar right now. This was number 3. We'll do Kiwi number 4. Here is Kiwi. Rushton says, is Swissy yen on your list? No, and it never is. And it never will be, Rushton. But I will look at it for you, my friend. Swiss yen, huh? All right, we'll take a look. Okay. First thing, the only thing I just wanted to highlight here on Kiwi, guys. Obviously, you know, the swing trade didn't work a little bit. We ran right through that stop. But look, I do have us coming in some near-term resistance right here. This is a basic trend line drawn off the highs from July and the early high we made in August. Okay, you can see that we came right into it right now, kind of hovering there for the last hour or so. So look, the Kiwi has been a very tough trade, in my humble opinion, as far as trying to get a handle on what the heck this thing is doing. You know, it was a perfect play into support here. The rally, you know, we kind of got stopped being bullish once we got into the median line, and then, you know, what's it been doing ever since? I don't know. It's just been a chop fest. So look, this is what I'm looking at the daily chart. Seems like we're broadly holding below the median line for now. I don't even want to call that resistance. I want to highlight the monthly open. Okay, and over the next day or so, that converges on the median line. So you're looking at the monthly open for Kiwi at basically the 80 handle as resistance. All right, near-term picture looks like this. I showed you just that basic trend line. What I do want to do is take a couple of minutes, just see if we can tack on some levels here. Now that we've made that turn, a basic retracement off the high might do us some good. All right. Okay, bear with me one more sec, guys. Sorry about the silence. Just want to check out some levels. Interesting. Okay, so the 161A, the advance converges on the 38.2 of the decline right here, around 73.35. That would be sort of the breakout target if we move higher from here. And the other thing I just wanted to take a quick gander at is what this pitch would look like. Ooh. Okay, I'd be more inclined to use this pitch right here just because the median line converges and further highlights, you know, that 73.30 region. But if we deaden it to the actual high in price that was made, you could see that the support structure here is almost a perfect tag on all 3 touches. So watch this region still as resistance in Kiwi dollar. Support the lower parallel. It's the kind of move I'd be expecting near term. I mean, from here, you know, I'm still in the mindset of where Jamie was last night, I think. We might have called it a little bit early, but from here, I do think you actually see a little bit of a pullback. The question is, you know, does it stop at that 50 line and just vault right into 73.30, or does thing just charge right through into the U.S. Open? So from a trading standpoint, from a setup standpoint, you know, if you're not already long, there's not much to do yet. For a scalper, near term, guys, you know, I'm looking for near term exhaustion. If you play the short side super nimble, it's not the good environment to be counter trend trading. But if we were to get a decent short trigger, a stop against the high, you know, I'd be looking for a very, very quick profit right at the former weekly opening range highs. So that's like 72.60 on the downside. All right. Not my favorite setup, but I just wanted to highlight where we are sort of in the grand scheme of things here for Kiwi. Any question on Kiwi dollar? All right, here is Euro. And here's what Euro looked like last night. So, we didn't get the pullback, that we were looking for last week. Yellen came out, a little more dovish, I guess, whatever. Dollar took a beating, and it just has been one straight shot ever since. I'm not sure who that was, as I noted earlier, was on Twitter tweeting at us that they think Euro is at resistance. Here's what I had, and here's what I showed you guys yesterday. So this median line formation that we've been in off the yearly lows has been pretty decent, calling price action, the upper parallel catching the highs. We're checking that again. 1996 also represents a level of interest. Can't remember the significance of it. The December 2015 uncovered close. There it is. I wrote it in notes yesterday. So, that level converging on the upper parallel, sure, yeah, I'd say that's near-term confluence resistance. Now, price has since run through. Okay, and here's what it looks like. Where's Euro on the daily chart? We broke right through. The next subsequent region, and this was the Twitter comment, is this broader structure on the daily chart. Upper median line parallel is right there, just above the highs we just pulled back from. Okay, why do I going to stick with this parallel? Well, look at the 50 line. A little bit messy as far as resistance, but on support, look at this gap that we made. April, pulled back again in May. Both of those advances launching right off that same slope. Here is the median line again. We broke through, saw acceleration. Here's the 50 line again. Once we broke through, we saw acceleration. We saw the 50 offer some support, and the upper parallel is just above where we just missed. So, use caution. I think Euro is going to be a bullish trade for quite some time. I think next month, like I said earlier, the seasonality is actually turned even more bullish. So from here, heading into the close of the month, dollar index nearing support, I think you'd look for a little bit weakness. Eventually, we want to look to buy that weakness, but I'm not looking to establish any new longs from here. Here's what the intraday chart looks like. So remember, we were in this channel last week. We were looking for a hold just to move back into support. Specifically, bullish invalidation for the broader trade was 1616. At this point, I'd like to bring that up even more so to basically right along this slope. I'm going to go ahead and clean this up. We don't need this anymore. That would be my near-term bullish inval, 118.47. Any questions on the euro? I'd be expecting this thing to fizzle out a little bit. See if we can't get that pullback. Okay, next up is Aussie. Here is what Aussie looks like on the daily chart first. Near-term resistance that we had noted last week, confluence resistance is at the monthly open. That converges still on the median line, just higher, right on the 80 handle like we said. So as far as the Aussie is concerned, I still do think you have a little bit more upside to go before all is said and done. Here's what Aussie looks like on the near-term chart. Really nice hold within this formation. I mean, aside from the topside pop, even when we pivoted through it, really clean. There's support. Again, near-term support, 79.50. This is what you would need to see to get bearish. As far as the top side is concerned, initial target is still going to be the August open. Right there, it converges on that median line around the 80 handle. So I'm still constructive above 79.05 here. Target's unchanged. Breach of that high, you're basically looking for the January 2015 opening range low. That's 80.32. And then you're all dependent on slope. At that point, hopefully we'd have a new formation to work with. But for now, I'd be willing to maintain a constructive outlook on this while above 79. Any questions on Aussie? We are flying through these today. Okay, that's number 6. Number 7, we did Kiwi already. Okay, let me jump into your questions here. Pooja was first with pound yen. So for pound yen, Pooja, I was looking at this last night. Obviously, you know where I stand on the yen. I like pound higher. Let me take a step back by just showing you the pound last night. So the pound came into a key resistance, not key resistance, but came into a perfect resistance level. Here's what it is on the 120-minute chart. I guess let me show you just the daily first. These are all a parallel. If you extend it off that low, oh, it's the 618. Okay, if you add the 618 line, see touch, 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 touch. That's exactly where we are as resistance. So you could get a little bit of an interruption here, sure. But broad story, it's a nice rebound right off of slope support and those December highs. So a nice level, and you popped right through and taken out the 100-day moving average again. So similar to the euro, it's a bullish trade at resistance. What do you do when there's a bullish trade at resistance? If you're real near term, you can look for some sort of scalp intraday. If you're a medium term swing trader, you're looking for pullback to get back on the long side. Like I said, at this moment, I do think it's a little bit vulnerable for a pullback, but you'd want to stay constructive while above 128.67. Also note that that's got some slope significance there. It's also last week's open, if I'm not mistaken. So just a decent level of support right below the weekly opening range high, and that's going to be our bullish invalidation level. As long as we stay above that, we're going to look to stay constructive on pound. So with that kind of mindset, Pooja, of where we are in sterling dollar, here's what sterling yen looks like. Pound yen number 8. So on the daily chart, obviously the break that we saw earlier in the month was kind of big, kind of significant. 142.14, that basic trend line off the lows. We got stuck between the 100 and 200-day moving averages, like the fight of the moving averages for a couple of days. Finally broke to the downside. You're seeing a little bit of a sliver there along that slope. That's just a parallel and a rebound. But, I still have a problem getting too constructive on pound yen. That's my problem, Pooja, with pound yen. I think the dollar has a better opportunity or probability of seeing further strength more so than pound yen does. Keep in mind, if things get really bad, geopolitical tensions, that yen safe haven trade could really sneak back in too. So I tried a long on sterling yen yesterday from 140.65, booked part profits at 141.22, stopped out in Asia overnight. So here's what the intraday chart looks like. All right, so your entry was good. That's exactly how I would have played it. Pooja, I hope that was a break even stop he took on the rest. And Pooja saying, yeah, the yen seems to be the problem. Isn't it always? In every yen cross pair, the only issue I always have is with the yen. Break even, stop, right on. Okay. Yeah, for this pair, look, for this pair at this point, Puja, just looking at this objectively, I haven't really looked at it this week. I would say that this just got it's a very clean weekly opening range. And you're heading into the close of a tumultuous week with certainly the end of month flows also coming into focus, is exacerbated tomorrow night. As we head into tomorrow night, guys, into the overnight, into Thursday morning, that's when liquidity is going to be the thinnest because markets are closing as far as the month is concerned. It's the long weekend here in the U.S., so not a time to be placing big bets. But yeah, I don't have any problem with the way you played that. That's how I would have had it. From here, just keep in mind this, slope that we're in, just a near-term slope off the high, is still bearish, right? Nice bounce here, but we would need to clear the weekly opening range to get some clarity. And then 142.15 is sort of the breakout zone. This is where you would see, or this is where, in my mind, is what would need it to suggest that a more concerted low, a more important, meaningful low is in place. So the levels are clear. It's just been hard to kind of gauge. Questions on pound yen. Pooja, does that help? Okay. Swiss yen, was that for Russian? Swiss yen, huh? Let's see what that thing's doing. Pooja says, yes, thanks. We'll wait for now. Thanks. Yeah, more than welcome, Pooja. Cheers. Okay. Swiss yen. Well, let's start off on the daily chart. Okay. So just objectively, whoops. Okay, so just objectively, today could constitute, Rushton, a break of the monthly opening range if we were to clear 114.80 on a closed basis. That's just, facts, has nothing to do with my opinion. So that's, in my mind, would suggest, yeah, you have further upside to go before you turn over on this. Now, broadly speaking, if you notice some of the yen crosses that we've talked about, we have sort of like the upside, right? Kiwi yen, maybe a little bit more to go. Pound yen, we were just talking about that with Puja, looking maybe a little bit more to go. So I do like the concept of it from what the technicals are saying, but we have to keep in mind, both the geopolitical risk and where we are in as far as time, in the fact that we're heading to the close of the month, thinnest liquidity conditions, icky times. That being said, if this were to, objectively clear this region, yeah, I would say that there's further upside to go here. And I'm not too thrilled with this slope either. I could live with that for now. Whoa, 50% retracement, right on the money. Outside reversal day off the low. Yeah, I mean, look, you're getting into some previous spike highs. End of conversation. Again, irrespective of what Mike Boutros thinks, here it is. You have a lot of spike highs into this region. So are longs vulnerable? Sure. Do I want to see price? Would it be like a Goldilocks if price spiked into 115.58? Yeah, I think that would be really nice. I have a pitchfork from the June low. Haha, you are drawing as I'm typing. Great minds, Rushton. Great minds, my friend. Um, so yeah, I mean that's sort of what and again, I'm just looking at this for the first time here. This is kind of what I'd be throwing together. By the way, I wouldn't use the June low. I would use the low in July. I tend not to use. Well, let me take a step back. I want my targets to typically be on the inside. So when I'm drawing retracements, I typically won't use the extreme stretch low as such we saw here on the 24th. This was obviously what, Brexit or something. And then this was sort of the next major low that we made in price. So I will typically not use that emotional low. Again, so much, the fact that price was only there for a couple of seconds makes me push off a little bit. I want to see prices established. There's a close. It's not just a really edge long of the wick. And typically for my retracements and for my extensions, I'll be using those lows. Now, when I'm talking about like a like a decade long retracement or something like this, where it's like 4 years old, yeah, I just want to get a general kind of notation of where retracement would be. But you know what? In fact, even if I move this, probably puts the 50 even at a better spot. And what I was saying earlier is I want to have my targets on the inside. So yeah, the actual retracement of the entire decline would actually be off the 2015 high, right? But I want my targets on the inside. I'd rather have my retracement show me a level just ahead of where I need to get in or get out than necessarily stretch it all the way to the limit. So I'll use this range near term as the immediate decline for the retracement. And lo and behold, again, you see the 50 line has actually offered some sort of kickback. So there's a little quick 101 there on trend lines. But does that help? Rushton said, okay, I follow. Awesome. So now let's drill down just a little bit deeper here. It's a good drill to do and see if we have anything of interest on the immediate term. Well, looks like you might be getting in some divergence if we were to close this candle here. 120 is also showing marking divergence on all three highs. And again, this is your monthly opening range, guys. Objective. This is an objective type of analysis you can get. So we open the month, we set a high, we set a low. You know, obviously these look like breaks, but as we always say, support is support. So even if the opening range were to break and you say, Mike, you said that's super, objective. The opening range broke here, so I should get short. True, but doesn't mean support doesn't exist. And the support line below it, is a good reason to not have gotten increasingly bearish on this once it broke, because you're looking at support, right? Just lower. So this makes this actionable, because if it is a break of the weekly opening range or the monthly opening range high, there's room. 115.60, 116.30, our next topside target to the upside. Rushton says it's currently at a round number 115, and Japanese love round numbers. They do. That is true. A lot of that, but remember that the other side of the coin is still Swissy. So, I hope that helps, Rushton. I hope that makes sense. I'm not gonna lie to you. I feel dirty just looking at this pair. He says, great. Yes, great help. Thanks, Mike. You're more than welcome, man. Always good to see you in the webinars. Any other questions, guys? That's number 9, Swissy yen. Again, I know it's been a lackluster 2 weeks, but we take what the market gives us. The market taketh, and the market giveth, and the market sometimes doesn't giveth, right? So conditions will start to really return again. I think looking forward to September, because I think there's going to be a lot of volatility once we really start to get back online, more market participation, get closer to that next Fed decision. And I mean, obviously, God forbid, but continued tensions, if this does continue to mount, should certainly offer some volatility in markets as far as the geopolitical atmosphere is concerned. So we'll keep you updated on all that. If there are no other questions, we'll wrap it up here. Guys, I am out tomorrow. I do apologize again. Do have some medical stuff to attend to, and then I actually will have surgery on Friday. But we will be here back on Thursday for another intraday strategy webinar. Don't forget, Jamie will be on board tomorrow, same time, 11 o'clock, no change, with the midweek strategy webinar. And again, I'll see you guys on Thursday morning. Till then, best of luck trading, guys. Stay light heading to the end of the month, and I will see you on Thursday. Cheers.